Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Phan Vee Leung, founder and CIO of Track Record Asia out of Singapore, is our guest today. Welcome to the show, V.
Hi Brian, how's it going?
I'm good, thank you very much. Now, before we get your insights, we're going to take a quick look at how crypto markets are performing and then take a quick roundup of regional stock markets. Bitcoin is at 30,099. It's down 0.55%. Ethereum is at 1,793.95. It's down 0.34%. Now, looking across the regional stock markets, the SGX is down 0.86%. The KLSE is down 0.78%. Shanghai is up 0.57%. The ASX All Ordinaries is down 1.3%. The Nikkei is down 1.41%. The Hang Seng is down 0.28%. And rounding up the numbers, we've got the Kospi, which is down 1.41%. So, V, given that most markets, with the exception of Shanghai, are down today, tell us why.
It's just following on yesterday's last night's performance in the US stock markets, which was down across the board, S&P, Nasdaq, and Dow Jones as well, about more than 2% down. And it's, again, I'm sure you're tired of hearing about it. It's a fear of inflation again. Tonight we have the US CPI data and inflation data. So markets are fearing that it could be higher than expected, and then it would force the hands of the Federal Reserve to go more aggressive than they've gone so far.
Now, the other thing that also adds fuel to the fire is this morning, the China Producer Price Index for May. The data came out and it jumped 6.4% compared to a year earlier. Now, that obviously gives further fuel to the fact that inflation in China is also on the rise. What's your take on the Chinese economy and whether or not, as a lot of markets talk is alluding to, there's going to be a threat of further stimulus down the track?
Yes, I think the Chinese government's message has been very consistent so far, that they are done trying to restrict the economy because jobless rate is creeping higher. Economic growth is slowing down to the level where they are unlikely to meet their 5.5% GDP growth target this year. So they're going to do more to boost the economy. They're going to do more to ensure that jobless rates will decrease, increase the number of jobs that are available to the masses. I think they are struggling with a few problems. One of them, again, is inflation, and inflation affects the average person much more than the super rich. And if it's in an environment of higher joblessness, it's very bad for them, because then they will increase the discontent of the population. So I think we're going to see more measures, especially now they still have COVID measures in Beijing and Shanghai. They are going to likely do more than the market expects to help boost the economy going forward.
Now, we obviously all investor eyes on the US CPI numbers today, later today. What are the expectations and what should we do as investors in this sort of inflationary environment? You're a trader. Tell us.
Well, I think that the I'm sure you have heard many experts come online to tell you what this environment is all about, but it truly is about how the inflation, the trajectory going forward, right? And the Fed is very afraid of inflation expectations becoming entrenched. Then that will lead to spiraling expectations of ever higher inflation. Then you will start to hoard goods. You start to buy now because it's going to be more expensive later on, right? I think that's key, something that the Fed needs to address. That's why they are talking tough. That's why all central banks are starting to, or all the major central banks except the Bank of Japan is worried about this. So how do we deal with this? I think in every environment, regardless of Of course, the easiest environment will be when it's all bullish, everything is great, right? You come
Yeah.
online, you tell everything is green, everybody's happy, you're happy, I'm happy, all your people in your audience are very happy to listen to you. But when it's neither here nor there, or it's actually worse now because it's trending lower. uh it's a bad feeling for most investors. But look beyond just the broad picture. We have bull markets in certain things like energy prices, natural gas. They're all trending very high, higher. So to guess as to when inflation will peak, it's a tough game, right? It's like all the experts that are doing all the calculations, they're wrong so far. The Fed is wrong. It's very unlikely
Yes.
you and I will arrive at a conclusion that's correct for the trajectory of inflation. But we can focus on the inevitable. The inevitable is there's a huge supply and demand imbalance in the energy markets. Look at natural gas prices this week. It collapsed 12%, more than 12% in one day because there was an explosion in a refinery in the US. So they think that there's not so much need for the raw product because the refinery is going to close for 3 weeks. And within a day, it's roared back to not to the same levels as before, but it's close, right? So in the scheme of things, energy needs remain very strong. The demand remain very strong as China reopens. It's going to grow as economies continue to grow. It's going to increase the demand. But we have been in a structural deficit of supply for the longest time. I think that's going to continue. So what would you do? What would I do? I would say focus on the things that are working and just reduce risk on the things that are not working. Whereas the average investor will tend to want to double down on the things that's not working because they're very angry with the markets, right? And then they for being so focused on things that are not working, they tend to lose out. The opportunity cost is huge, right? They're losing out on trends that are going in the right direction.
So, V, I think that's a great takeaway. Focus on things that are working and not on the things that are not working. I think that's a great takeaway for today's show. Thank you very much for coming on the show, V.
Thanks, Ryan. Always a pleasure.
Now, we've been speaking to Phan Vee Leung, founder of and CIO of Track Record Asia out of Singapore, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Please subscribe and like our various platforms. Thanks again for tuning in.